What if the biggest winner of the artificial intelligence boom is not an AI chip company at all? What if it is the boring power company that keeps the data center running? That is exactly the bet behind a brand new ETF called IVEP. It is the Dan Ives Wedbush AI Power and Infrastructure ETF, and it started trading on April 8, 2026. The fund is built around Wedbush's proprietary research list called the IVES Power 30. Wedbush analyst Dan Ives is one of the most quoted technology voices on Wall Street, and his pitch here is simple. Artificial intelligence has a $725 billion power problem. Every new data center needs electricity, cooling, transformers, switchgear, and copper. IVP is meant to ride that wave. The fund holds about 31 stocks across four segments: power generation and fuel supply, grid infrastructure and data centers, equipment and power management, and materials and enabling technologies. The largest names will sound familiar to anyone watching the AI energy story: Bloom Energy, Quanta Services, GE Vernova, Vertiv, and Siemens Energy. Now here is what they do not advertise. IVEP charges 75 basis points a year. That is roughly 10 times what you would pay for a plain index fund. On top of that, the fund only has about $10 million in assets right now. Tiny ETFs can have wide bid-ask spreads and limited trading liquidity, and they can quietly close and liquidate if assets do not grow. The fee is high because this is an actively curated thematic strategy with a famous analyst's name attached. You are paying for Wedbush's research, not for cheap diversification. And the small asset base is normal for any new launch. The real question is whether enough investors believe in the AI power thesis to scale it up. Because IVP only started trading in April, there is not much of a track record yet. What you can do is look at its underlying names. Companies like Vertiv, GE Vernova, and Bloom Energy have already moved sharply over the past year on AI build-out demand. That is the same trade IVEP is packaging into one ticker. IVEP makes sense if you already believe artificial intelligence capital spending continues and you want exposure to the picks and shovels rather than the chip makers. It is a thematic, narrative-driven fund. It is not a core holding. Think of it as a satellite position next to broad market funds like VOO or QQQ. One last thing. A celebrity analyst on the cover of a fund does not guarantee performance. Thematic ETFs that arrive after a theme is already running can disappoint. Size your position accordingly. If this breakdown helped, a like and a subscribe go a long way. And tell me down in the comments, are you betting on AI software or on the power grid behind it?